Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from February 9th to February 13th, 2026. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from February 9th to February 13th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with Australian household spending data and Australian Westpac consumer confidence change. Tuesday brings Australian NAB business confidence and US retail sales figures. Wednesday features the crucial US Nonfarm Payrolls data along with the unemployment rate, Canadian building permits, and Japanese PPI figures. Thursday includes UK RICS house price balance, UK GDP figures including quarterly and monthly readings along with industrial production, US initial jobless claims, and US existing home sales. Friday concludes with Swiss inflation data and the important US inflation figures including both headline and core inflation rates. This week's key market-moving events will be the US Nonfarm Payrolls on Wednesday and US inflation data on Friday. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the US dollar against the Japanese yen and the British pound against the US dollar, as both instruments show contrasting technical setups heading into key data releases. Let's start with the US dollar against the Japanese yen. Looking at the daily chart, the dollar-yen pair is currently trading around 157.22, showing strong bullish momentum. The price has been moving higher above the 20-day moving average after a higher move in the past few days, confirming the upward trend. The stochastic oscillator is moving inside the overbought area, indicating strong buying pressure but also suggesting the pair may be due for a pullback or consolidation. Looking at important levels, the US dollar against the Japanese yen has support at 155.82 and 154.68, while resistance can be found at 158.36 and 159.46. Wednesday's Japanese PPI data will be monitored by traders, though the pair is more likely to react to US data releases this week, particularly Wednesday's non-farm payrolls and Friday's US inflation figures. The strong positioning above the 20-day moving average with the stochastic in overbought territory presents a bullish picture, but traders should be cautious about chasing the rally at current levels. The next target for bulls will be the 158.36 resistance level. However, if Friday's US inflation data disappoints and comes in lower than expected, it could trigger profit-taking and push the pair back toward the 155.82 support level. Now, let's turn to the British pound against the US dollar. On the daily chart, the pound-dollar pair is currently trading around 1.3608, showing signs of stabilization after recent weakness. The price is moving around the 20-day moving average after moving lower for the past few days, suggesting indecision in the market. The stochastic oscillator is trying to cross higher inside the oversold area, suggesting potential for a bounce from current levels. Looking at key levels, the British pound against the US dollar has support at 1.3357 and 1.3185, while resistance stands at 1.3846 and 1.4007. Thursday's UK GDP figures will be crucial for this pair. The quarterly GDP is expected to show growth of 0.2%, up from 0.1%, with the monthly GDP expected at 0.1% for December. The position around the 20-day moving average represents a critical juncture for the pound. The stochastic trying to cross higher in oversold territory suggests buyers may be stepping in. Strong UK GDP data on Thursday could provide the catalyst for a move toward the 1.3846 resistance level. However, disappointing data or a strong US non-farm payrolls report on Wednesday could push the pair toward the 1.3357 support level. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's US non-farm payrolls and Friday's US inflation data, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.